You should never have a surprise tax bill as a business owner. And having a surprise tax bill is a telltale sign of having bad accounting advice. I see this happen for all businesses of all shapes and sizes, whether they be 6-figure, 7-figure, even 8-figure businesses. And in some cases, they're paying their accountants tens of thousands. I've even seen some paying over $100,000 a year for these services, and they're still having surprise tax bills. In this video, I'm going to explain to you how you can overcome these surprise tax bills, why you should be able to forecast your tax liabilities out into the future, and how you manage your cash flow accordingly to ensure that you can continue to grow and scale a profitable business. So let's talk a little bit about tax. In Australia, there are a series of different taxes that we typically pay in business. Now, first and foremost is goods and services tax, or GST. It is a sales tax which we have to collect on the revenue that we receive for certain products and services, and that we also pay for certain products and services. Not all things are taxed the same, and therefore we need to have a really good bookkeeping process to understand what we should be collecting tax on, which is relatively simple, but the things that we pay tax on, because we don't typically end up paying 10% of GST. I've seen so many business owners overpay in goods and services tax because of improper bookkeeping process. And it's because their bookkeepers don't truly understand how tax planning works in the context of running. The next biggest tax that we pay is tax that we pay on PAYG for our employees, or if we are employed by our own business. So, as a business owner, as part of your business activity statement, you are required to hold tax on behalf of your employees and also pay the statutory amount of superannuation, along with other costs that are associated with that. Now, the biggest issue that I see for so many businesses is that on their profit and loss statement, they are accruing for the total gross amount of these expenses. However, they don't pay these expenses monthly. They typically pay them quarterly. And they haven't actually put that money aside. So although their profit and loss has accrued the expense, they haven't necessarily matched the cash flow to suit. And for this reason, I've seen many business owners, because they haven't got the right cash flow structure, fall into arrears in their business activity statements because they haven't put enough money aside. A good accountant should be providing you with a payroll summary each and every single month, and should also be providing you with advice around how much you should be putting to these separate bank accounts that you've got in your business to provision for your GST, for your PAYG, and for your superannuation. The next biggest one is for larger businesses who are over a certain amount of size and employ a certain number of people, and they encounter payroll tax. Now, I fundamentally disagree with payroll tax. I think it's a horrible thing. However, it is a consequence of growing and scaling a bigger business. And I see so many bigger businesses, as they grow beyond this point, fail to acknowledge when they have started to accrue payroll tax, and therefore fall into arrears on that basis as well. So once again, a good proactive accountant should tell you that you are approaching the payroll tax threshold, should be providing you with a plan to ensure that you can be profitable once you can incur this tax, because just because you've employed the people doesn't necessarily mean that you're producing the revenue. So we need to understand the financial model of the business and make sure that we can put the money aside. The next biggest tax is your tax on profit. Now, assuming that you are running a business through a proprietary limited company, you are going to pay typically 25% on earnings in profit tax, right? Now, the big issue here is that this is assuming that the money is retained in the business. And what I often see is that for so many business owners, they put themselves on a salary that's really small, let's say 80 grand, that's insufficient to fund their lifestyle. They take the remainder of the money out of their business by way of a director's drawing. That sits on the balance sheet until the end of the financial year, and their archaic accountant then says to them, hey, you've made this profit, you've distributed this stuff, this income to yourself. You either pay it back and you only pay the 25% tax, you distribute it as a dividend, and then you need to pay the top-up tax for yourself as an individual at the marginal tax rate. Or thirdly, you go into what's called a Division 7A loan, where you kick the tin down the road and you pay interest back to your company. And for most business owners, they end up taking the last option because it is what avoids them having to pay any additional tax in the first place. Now, the issue with this particular strategy is that they basically are kicking that tin down the road, and this issue is going to continue to compound into the future. This has caused so many businesses to find themselves insolvent, triggering substantial tax problems, substantial cash flow issues later on down the track, which can be completely avoided with a proactive plan. The idea here, guys, is that a good accountant should be helping you create a cash flow and financial forecast at least 12 months into the future. That financial forecast should also be forecasting your GST considerations, should be forecasting your PAYG and super considerations, should be forecasting your payroll tax considerations, and your profit tax considerations. And then as an individual, working out how you're best to distribute that profit in order to meet your own personal goals and objectives without paying any bonuses to the ATO. Most accountants don't do this. It is all historical and reactive, and this is the reason why so many business owners end up with surprise tax bills. All of these things can be forecasted and planned into the future, and what that can allow you to do is to firstly ensure that you have the right financial model in your business to consider the future tax consequences that are going to come as a result of you growing and scaling, and ensure that you set that money aside so it is out of sight and out of mind, because that is not your money. Now, it is the government's money, and however, whether you agree with that or not, you need to put that money aside, and by doing so, it's going to ensure that we're only spending the money that is yours to keep for you to grow and scale your business and for you to build your wealth. So, if none of these things describe how your accountant deals with you, if you want to have proactive advice, make sure that you never have a surprise tax bill and that you can plan all of this stuff out into the future to continue to optimize and improve your business model as you continue to grow and scale. Well, our accounting team has some time to help you over the next 30 days. So we've got some capacity to take on about 7 new clients. So if you're running a multi-6-figure or 7-figure or above business, you value proactive advice, you want to set up the right financial systems in your business that give you transparency, that give you clarity, that allow you to forecast your cash flow and your tax liabilities so there's never any surprises, you're in luck. Feel free to click the link below or jump on the link in my bio. Love to have a conversation and see how we can help you. We'll review your tax structure. We'll review your last 2 years' tax returns and financial statements. We'll review how you're reconciling things in your current financial workflows, and we'll come back with some really specific recommendations on what you can do to improve and potentially even resubmit things to get some money back from the tax man. Got any questions? Hit me up. We'll catch you soon.